Good morning, everyone. Good morning, guys. How is everyone doing today? Is everyone okay? Today is Monday, 11th of December. Markets started early this morning to show some activity, especially on the Japanese yen pairs. So, Olga said I'm doing really well, thank you. Today's going to be a great day, absolutely. Adolf said, I'm the first person to be here. How are you doing today? I'm very good, my friend. Thanks for asking. Nick, good morning. How are you doing, friend? Leopold said, doing amazing. Well, boss, how are you doing? Hope you're doing good too. Yes. It's a nice day. I still live in an island, so I still see the sun, regardless it's December here. Towards Christmas. So let's start with the goal today, as it happens to be that one on the screen. So here is the most important thing when you read. Yes, Malcolm. Now I'm in Cyprus. It's an island in Europe. So let's start gold. We commented last week that based on this double inside candle formation, the price is expected after the non-farm payroll to break to the downside if the non-farm payroll will favor the US dollar. And that actually happened. We do expect the price to move lower, and not only to move lower, but where is the next swing low? It's somewhere down here. So there is fairly good room for this opportunity around the level 1963, to be honest. That's what we see on the chart, and this is actually a trade setup we can use on the lower time frames as well. As an example, on the 4-hour chart, price looks, it has a defined, for some people maybe it's a head and shoulder, but that's not a head and shoulder, because the neckline, it had to be defined, the low of the right shoulder, it has to be defined before the break of the neckline. So that's not a head and shoulder, but it's still a reversal price action chart pattern, and it has the implications of a downward move. Any comments on that one? Any questions? WTI daily chart, price makes these higher highs and higher lows. It has all the way this sequence of price makes lower highs and lower lows, so it's in a harmony, it's in an alignment, the market, and the market is in a downtrend. It broke below this this previous S support. Now it's going to be called as an R resistance. If the price climbs all the way up to 72, let's say 31.8, and rejected by this price, we might see more continuation to the downside. Otherwise, if it continue moving upward, we might see the price retesting this 74 to 75 area, where it's also a hidden inside support sitting at this level. So please keep an eye on these two areas, as price might penetrate the R1 and move all the way to the 74 to 75 area. Dollar index. Here it needs some attention, guys. Many people, they read the market, but they read it the way they want to read it. Okay, they don't read it the way the market really actually is established. So, and what's the issue with that? The big issue is that they don't understand the turning points in the market. Like in this one here, regardless fundamentals, regardless what we believe the market will do, the price broke above an established important trend line and closed above with 2 days in a row. Therefore, it makes this trend line invalid. But why I kept it on the chart? Because a broken trend line, a broken downward trend line, usually retest it on a return move. And here it's the retest. Price broke above, came down, and it retested on Thursday and rejected. And on Friday, non-farm payrolls create a new high. So it looks like that this market turned from a downtrend to an uptrend. So how can we use it in our benefit? We can look to short the Aussie Euro Pound Kiwi and go long on USD CAD, USD Swiss, USD JPY. So this is pretty much how the dollar index help us to get into some trades. Now, there is a possibility the market will move all the way down, absolutely. But there is a high probability that this chart pattern to be developed as an inverse head and shoulder, and therefore to continue moving upwards at least until this inside resistance. Australian dollar, US dollar. The news, the expected news events are looking for a weak Aussie this upcoming week. As per the forecast, always as per the forecast, this week will be extremely busy with news. The Swiss bank, the Swiss National Bank, will report interest rates, and they forecast to keep them at unchanged at 1.75%. Unchanged interest rates are expected by the Bank of England at, I think it's 5.25%, and also by the Fed on Wednesday at 5.5%. Okay. There are also CPI numbers in the US. It's expected to slightly drop, and also there are unemployment rate in the UK, another employment change in Australia. By the way, I just remember the news from memory. I don't read them in front of the screen, if you are wondering. If I don't show you the screen, I'm not sharing any screen because I don't read them. Okay, it's just from the memory. So bullish engulfing was the price action on Thursday, and the market on Friday we can say that was a dark cloud candle, but not actually a dark cloud as per Steve Nison's book, because we don't see the gap on the price. Okay. And what can we expect to see from this point here? For me, it's very clear. Price makes lower highs and lower lows, as per the chart. We don't see a confirmed lower high yet because no, actually we see a confirm because we have a lower low. So this is confirmed, and that's the number 4. Therefore, I expect to see more continuation to the downside. The room of opportunity is until the S1 support. Of course, if this will taken out, then we look for something lower like this one here. But it's too early now, it's still on the daily chart. Euro. He used to sit around this inside support and price. If it's gonna break below, actually I sent out one official analysis, technical analysis, to a company that I provide technical analysis services on a daily basis, and we had a couple of we had a trend line somewhere here. Anyway, I don't want to go in more details on the hourly chart because it's something that it's a paid service I provide to some traders and some people, so I prefer to stick on the daily chart. This still has bearish implications, so we expected to see the price moving lower at this point here. The last week's candle ended as a solid bearish. As we can observe from the chart, price is bouncing around this 10 and 40 period moving average on the weekly time frame. The reason I use the 10 and 40 period on the weekly time frame is simply because they represent the 50 and the 200 on the daily chart, but I don't like to have moving averages on the daily chart. I prefer daily chart to be a bit clean. Nicholas said, I think it will be depend on how the DAX moves. That's correct. And Xavier said, yeah, it's a bearish, but it could try to make a pullback. Yep. We also a break below this level. We'll see price hitting lower. Which exams to take? Look, there are multiple exams to take. One is provided by the Chartered Market Technicians. Another is provided by Technical Analysis Society. You can Google them and you can check them out. Nick said, very lovely session this week. Thank you. Justin said the hourly time frame, it's a lot of zigzag. Yes, I agree with you. Although it has a good information, actually, the hourly on the euro dollar. To be honest, it's a quite well defined, paying attention to the swings. Next one, pound US dollar. I'm still in this trade initiated from last week due to the bearish engulfing and all the weakness we identified on the pound. This week I believe it's gonna move a bit of sideways for the next couple of days until the Bank of England also, as well as the Fed, will report their interest rates, and we'll see what's gonna happen. For traders, for those who took the trade with me, you guys, if you wish, you can move your stop loss, and it's something I may gonna do later on after the webinar, to move my stop loss from this point here to this point there, above the previous Thursday's high, actually above the Thursdays and Wednesdays high, to eliminate the risk. I don't take any profits currently from this trade because I don't see a reason to take the profit. I go for 1.5 reward to 1 risk on this one, and I stick to my plan. So we will let the trade play out. Kiwi is expected to to experience some weekend if the news forecast, if the outcome confirm the forecast. If that happen, the New Zealand against the US dollar might gonna experience a solid weakness because the US dollar as well, non-farm payroll outcome was positive, and it's gonna also depends on the Feds and the FOMC minutes. That's gonna happen 30 minutes. It's gonna take place 30 minutes after the interest rates reported by Fed. I'm looking, if you see, I mark the New Zealand everywhere. I'm looking to short the New Zealand upon a solid technical and picture as well, not only fundamentals. Sometimes I spot well the fundamental side, and I don't get an entry on the charts, so I don't take the trade. That's very important, guys. Pay attention to that, please. If you understand that something might gonna move in that direction, a currency pair, but you don't see any entry that you usually take and you're happy to take a loss if that occur, it's better not to take the trade. On the 4-hour chart, price after this extensive uptrend with multiple higher highs and higher lows on the 4-hour, it entered in this consolidation. It took a while for this consolidation to develop, and that's great because it shows that likely the buyers are not in control anymore and the price might drop. If some of you are trading 4-hour time frames, which is one of the very good time frames to trade in my opinion, here are a couple of multiple inside candles. Let's say it's this point here. We have this point there. Price a break below of 0.61054 may cause price to move much lower. And for me, a good target, it's gonna be this area here, the low of this one here, and that's exactly the 60 cents, 0.6. Now I notice that it's just below the 0.6, which is good. Frankie said, yeah, if you don't see the entry, yes, correct. Erica said this price was taken over by sellers now, yes, likely. My also selling on it is highly possible, yep. Jacob, so if we see that we can place the stop loss above the sell high, that high, yes, agree with you. Morgan, where would you be placing the stop loss? If I enter short on this one here, short from there, if I sell it, I will have placed my stop loss somewhere above there, okay? Because the price might gonna do some weird thing. It's not a downtrend yet, so we can place tiny stop losses. People, unfortunately, traders, they lack the understanding of how to trade trends and how to trade trend developments and ranges. It's a totally different approach. It requires not only different plan to trade them, but also it requires different skills and mindset to trade a breakout like this and to trade a trend like this. Like if you spot that the market after this move is moving upwards, then you definitely pretty much want to be a buyer at the point you decide you want to be a buyer. And you can, let's say you can place a buy stop above here, a stop loss below there, okay, price got you out of the trade, then there is a new entry with tight stop losses. We buy there, stop loss below there, and we let the trade run. And let's say manage stop losses, trailing stop losses on the run. Or let's say you enter here, you place stop loss there, and you take profits somewhere here or at the 1.27 FIB extension. It's a different approach. It's not the same approach. Rather than if you decide to take this trade here, first you want to risk less if you trade short from here, and if you trade long from there, and from there you want to risk less than if you buy in an uptrend or if you sell in a downtrend, because these are very low probability setups. But you need someone who knows this stuff to really tell you how the market moves in different trading environments. And that's the most important. Traders, they try to trade the ranging market or the reversal the same way they try to trade the trend. They don't understand that the one has extremely low probability success rate and the other has a high probability. But on the other hand, the trends, and remember that they give high reward, but they are low probability. They give high reward to risk ratios, but you get more losing trades when you trade trends, because you don't know exactly where is the beginning of that retracement, you know, to get into the trend. But really, you need to sit down with someone to explain you all this stuff. You're not gonna find this stuff, guys, on the internet, unfortunately. Okay, you're gonna find all the basic stuff like risk 1% of your account or 2% of your account and set up the trade and forget it and all this stuff. These maybe are good things to do on the 1 minute chart and maybe 5 minute chart. When you go to the hourly, to the 4 hour charts, they are more solid price actions, there are more solid trading patterns. There is a totally different way to approach it. Or if you trade trends on the 15-minute charts, you're going to approach the market totally differently than you're going to trade trend on the 4 hour chart. But everything it needs to be learned. Okay. Next one, USD Canadian dollar. If we turn to line charts, we will see that this swing here had turned to had broken by this swing there. Do you guys see it? So that requires a bit of attention, because I really do expect the price to break to the upside and penetrate and surpass the R1, the 61 fib of the downtrend, the trend line. I expect that to happen, to be honest. So I'm not in a rush to take a sell trade here. If the price will sell off, then let it be. It's okay. I mean, I'm not gonna cry for that. It's okay, because high chances is overly the dollar might gonna gain some strength maybe this week, maybe not. Okay, who knows? But because of this new swing high that taken out the previous swing high based on the line charts. Line charts, they show only the closing prices and not the opening, the high and the low, only the closing prices. It looks like at the close here, the buyers were stronger. And so let's see what's going to happen here. USD CHF. Last week I tried to get into this trade here from this bullish. I was expecting a bullish engulfing. It didn't occur as a bullish engulfing, so I'm not in this trade. And I would like to see the market create a move to the upside and taps into this 0.5 to 0.618 fib area. That will be good. USD Japanese yen. It's definitely a downtrend, okay, but for those who want to take some aggressive trades, and it's all good. I mean, it's nothing wrong to take trades against the prevailing trend. In my opinion and in my experience, it's a myth when people, they say always trade with a trend and never back the trend, and always trend is your friend. In the futures market, in currency market, cryptocurrency, high volatility markets, it's absolutely fine. It's one of the best strategies to trade against the trend, because at some point the price will contract it and go back to what we call a mean, to an area that it feels comfortable. Therefore, we can trade that move. That's not a problem at all. The thing, and guys, please pay attention to that. The only issue with trading against the trend is for you, the trader, to know how to trade it in terms of risk, reward, and risk per trade. So if you are trading any counter trend trade with the same risk that you trade within a trend move, you're setting up likely yourself for a failure. All right, you need to understand how the market moves, the dynamics of each move, and how to really trade counter trend markets. Next one, pound JPY, same behavior, price is moving upward. I'm waiting. I want to see the price actually to come somewhere at this area, at the fib. Euro JPY, still price moves upward. If you guys are to get some trades against the trend, absolutely great strategies. However, you understand how to trade them, in which time frame to trade them, and how much to risk on the trade. I'm not here to tell you you risk this and this and that. No, every person has a different way of thinking when it comes to trading. Like for some people, 1% is too much money. For some others, it's nothing. Then for some people, to risk 1% when they trade $100,000 an account, or 1 million in their account, then it might sound maybe too much. So everything depends on who you define yourself as a trader, who you believe you are as a trader, and what risk you are comfortable taking in your trading. All these things, trust me, all these things, it's something that we can sort them out over a few private coaching calls. That's all. Everything can be sorted out. Next one, New Zealand Japanese yen. It moves upward as well. Price make a higher high, so there is fairly empty room here to be filled. I like to see price come somewhere in the middle of the long candles, either red or green. Stuart said yes, some are not moved by it also at the same time. Madeline, yes, we'll wait more of this. Cam will gain weakness. Porter, it all boils down to the trader. Yep, absolutely. That's true, guys. Australian dollar, Japanese yen, same. All the Japanese yen pairs now, they are moving to the upside. Something I was really looking to trade last week, it was to buy at this support, but because I'm a price action trader, I want to see price action before I enter a trade. I wasn't looking at the 4-hour charts, to be honest. On the 4-hour charts, there were some good opportunities right at support, but because I don't look usually the 4-hour charts to trade, so I didn't get into any trades. I may gonna miss an entry, that's okay, but for me it's not an important thing, because a trade that hasn't been planned to be executed, it's never missed. Okay, some traders, I missed this trade, I missed that trade, but do you trade at, let's say, 2 a.m. your time? Maybe you don't trade at that time. So yeah, what if the market moved at that particular moment? You didn't miss the trade. You need to have a solid plan. You need to look for your checklist, for your plan to appear on the chart. And if your plan appears on this chart, you take a trade here. If not, you don't take a trade. Simple as that. I often see traders overcomplicating stuff. So Australian dollar and New Zealand dollar both expected to get weakened this week. So let's try to find some moves against these two currencies and get advantage of that. Canadian dollar fairly strong. It break below. I got a losing trade last week on the pound CAD. But because I was looking to buy this bullish engulfing, but from this week, because the market established a lower low, I'm looking to sell it. Now, today, a lucrative opportunity might arise on the 1-hour or 4-hour charts, but because again, I don't look at these time frames now, it's gonna be a bit hard for me to get into the trade. I still hold the trade on the CAD CHF. So far it moves well. I entered here. I want to take profits ideally up there, but this trade, it's already preset it up with trailing stop loss. It's like here, it's one part of my checklist. For those they sit on private coaching with me, they get the full checklist on every single thing I trade. Later on, once my website will be complete, once MarketMinds website will be completed, you're gonna have all of you will be able to gain access to every single thing I trade day in, day out, to the course, to the checklist, to the setups, everything. Okay, but because now I'm building it, it takes some time. But trust me, I believe firmly with everything I have within me that after we complete the website and we're going to put all the education there and all the ways we trade and all this stuff, it's going to be, in my opinion, if not the best and the most informative website, at least one of the top 3 most informative websites when they are published on the net. Okay, and I'm 100% sure about that. So all of you can get benefit. So we do expect to see more push to the upside. If it's not gonna come, that was a high probability trade, so it was a good trade to be taken. It applied a solid plan. There is a risk management on the trade. Again, before we enter the trade, the idea is to trail the stop loss, but because on Friday it got triggered, the stop loss has to be trailed maybe tomorrow. We will see. Depends on what's going to happen here. New Zealand Canadian dollar, it's something I'm looking to short, absolutely, but on the daily chart we have an interesting indicator that calls ATR, average true range, and this, if I enter short with a stop loss above there, it's about 80 pips, and the average true range for this one, it's less than 80 pips, so I'm not interested to set it up. Now, if some of you guys are looking on the 4 hours and hourly time frames, please keep an eye on that, because if a lower high and a lower low develop anywhere on the 4 hour or on the hourly chart, that will be a good opportunity to take, in my opinion. Web asks if the website will be coming in next year. Yes, of course. Joanne said, please tell us when it's published. Absolutely. Guys, I will let you know. Not strong opinion yet by D1, but open to learn. Absolutely. All of us, we learn every single day. Hamilton, all right, we'll be watching out for this. Yep. So let's see what's going to happen. Guys, I think that's all from me today. Cryptos, interesting. Early this morning, they start moving a bit lower. Let's see if that wasn't just a shakeout and it will continue to move a bit lower. Solana, it was 72 yesterday, the time I was watching this one, but okay, now 68. Let's see what's going to happen with Solana. Actually, Solana is one of my favorites in general, and it's one that I like to invest on this one. And German 40. Look at this. After, let's say after pretty much 2 months, we're going to get maybe a retracement. That will be good. Sounds like a joke, but that's a reality. So during the London Open, maybe we're going to see a directional move. Maybe from next year, if you guys like, maybe I can keep the webinars a bit longer, and we can do some breakout trades for the London Open. I can show you some breakout stuff. They're really good, but yeah, not today, not before Christmas, not before New Year for sure. Okay, now I would like to get your attention for a second, and just to let you know that before Christmas, before New Year's, most of the traders, they start taking some annual leave, some days off. Markets after this week, they're gonna enter in some weird behavior. That's what they usually do. So when you're trading intraday, guys, please keep that in mind. Have a cautious understanding that the markets are not in alignment all the time. So make sure you manage your risk accordingly. And if you need anything that I can be valuable for you, or any of MarketMinds Mastery services we offer, okay, feel free to reach out to me actually, so we will take it from there. So I wish everyone to have a fantastic day ahead, and also happy trading for those who are going to be around. And of course, I will see you tomorrow at the same time. If you notice, we moved the time instead of 9 a.m. to 9:15. It looks like it served more traders that time, and also it gives us more time to move forward until the London Open. And yep, so Rumen, hello. Thanks for joining us. Okay, so guys, again, have a fantastic day ahead, and I will see you tomorrow. Bye everyone. Bye bye.